What's good, YouTube? It is your boy Go to Trades, and I'm back with Straw Hat Trading Channel. We are back with another weekly analysis of the stock market ahead. So you are ready for the stock market ahead for the week ahead and all that good stuff. I said like head like 5 times, but look, we are back. Anyways, this week, as we can see from the stock market heat map, it was a great week. This week was amazing, to say the least. I mean, every block here is green. Obviously, there are some pockets of red. You got Apple, you got Tesla with a terrible week, 7% negative on the week. You have Disney, who had earnings, another 6-7% down on the week. Airbnb, almost 10% down on the week. Look, guys, over this week, we just been seeing like a pretty decent week, I guess. Now, is this the end of the bear run that we've been having since the month started, since the end of April? Maybe it's over. Maybe we will be breaking back to the upside. Maybe we will be breaking back above all-time highs. Now, that possibility isn't taken off the table, but also going down back, retesting these lows of April is also not off the table either. But of course, we will get into that analysis into the video. But before I get into that, let's go over our macroeconomic calendar as well as our earnings report for the week. Now, for our macroeconomics for the week, we can see that they are some pretty decent events to say the least. But Tuesday is going to be pretty interesting. We have our PPI year over year, core PPI, and that's going to be pretty important. And as well as that, we have Fed Chair Jerome Powell speaking at 10 a.m. So 8:30 a.m., 10 a.m., everything in the morning on Tuesday is going to be very volatile. So please be careful with the trades. Also, on Wednesday, we have core CPI year over year. That's going to be pretty important as well. Hopefully, we get a good CPI, and then we could go straight to the moon again. If not, if we get a bad one, then we're going to go down to the gutters again. Maybe, because we have to look at the totality of data, I guess. Maybe a bad CPI might bring us higher. Who knows? I don't know. I can't even tell you if a good CPI is going to bring us lower or not. We're just going to have to check the price action. So on Thursday, we have the initial jobless claims. Again, job datas are going to be pretty important from now on. That's just what it is. We have to see how unemployment is affecting within these tightening conditions. So they're going to be pretty important. And everything else is just everything else. Friday's nothing really to come. So this week, again, I believe that we have our Tuesday and Wednesday. That's going to be our, I guess, hottest times during like this week. So really pay attention for your Tuesday and Wednesday. And Thursday, I think that's going to be a nice little closer with the initial jobless claim. So please pay attention to that. Next, let's go into our earnings whisper. What's going on for the earnings this week? Guys, this week we have some biotech names. We have Legend. We have Next. That's going to be pretty important. Well, not pretty important, pretty interesting. We have Walmart, another pretty interesting name. We also have Applied Materials. AMAT is going to be pretty important for chips, but I'm not going to say that's going to be a very important. I don't think any of these names are going to be very important for the market, but I think these names are pretty interesting. Okay, NU going to be pretty interesting. Home Depot is going to be pretty interesting. Alibaba is going to be pretty interesting, of course, because of China's starting to look pretty good. Lunar might be interesting to some, but for the most part, just like last week, I'm not really interested in these earnings reports. I couldn't even give you guys one of my guest analysis of if I think they'll beat or do well, or I honestly don't know, and I honestly don't care. But hey, we're going to still check it out and see how they perform and all that good stuff. Next, let's get into our macroeconomic charts. So we have our dollar and we have our US 10-year yield. So the dollar had a pretty weak week, to say the least, right? We ended off with this kind of shooting star-ish formation, a long upper body wick, but also have a pretty decent sized lower body wick to show that buyers are still kind of here. So, like I said last week, right? At least what I believe I said. I don't necessarily remember. Let me not remove that. Okay, so we are kind of forming this cup and handle, right? So we have this cup with a handle, and now we are trying to break out, right? If we end up breaking out above this 107.3, I believe that we will see a lot of pain in the market. Around this time was when we had a lot of pain in the market. We also had a bottom. And as you can see, this was our top for the dollar, which was our bottom for equities, right? So if we actually, because right now we just created a top on the dollar while the market also created a bottom on equities, and now obviously now the dollar is kind of tanking a little bit and equities is going higher, but we are finding a bottom on the dollar, which we should be finding a top on equities. So this looks like the Mickey Mouse from Disney. Let me go ahead and take it out. But yeah, so if we are finding a bottom on the dollar and we are finding a top on equities, I do believe that we will see some weakness up here where we are on equities. It might not seem like it to most, but I believe, again, my opinion, I think that the dollar is hinting that we are seeing a top on equities, even though we look pretty good. And I will go more in depth into it when we get this index analysis, tech analysis, and chips analysis. Okay. But that's what I think for the dollar. Again, this week I believe you want to look for maybe this, because we had this buy zone here. I'm looking for, we had this attempt to get above the supply zone, which was our demand zone. So I believe that we could, for the next week, try to retest this area to make sure to solidify that this is our major demand zone now. If we can make sure that this is our major demand zone, getting on that retest, right? That two try failure pattern, right? It's like this when you try twice and you fail. So this is the first failure. So if we get another failure and fail, oh my God, no, let me take that, don't look good. So if we get another test here and we fail, then we could just, we could rock it up and potentially, like I said, create this not head and shoulders, this cup and handle formation into all-time highs. Not all-time highs, but local highs, which is above your October highs of 2023. So that's what I'm watching for. Again, if we get above there, then I think we're looking really good on a dollar and pretty bad on equities. Kind of similar, we all see the yields looking pretty similar to the dollar. Again, you are forming some type of cup and handle as well, and it's the same formation. However, you actually look like you're trying to base this, like you're already trying to base this on yields. This area is acting like some type of demand base area, and you already had your two try failure to get under, right? So I believe even if we keep finding sellers, I do think like this is a major demand area. And if we can hold above this zone here, so anywhere above here, if we can hold this, I think we can make our way right back into our local highs, right? This local high zone. So if we can make it back into our local high zone, I do believe that we can break out of this monthly range here. And like I said, if we break out of this monthly range, like I said last week, I do believe we'll see a lot of pain in the market. Mind you, remember, this is when, as we can see from July 2023, when we started breaking out this monthly range, right? You see how we just kept going up higher and higher? The market was tanking as this was going higher and higher. So if we break out and we do that same formation, let me go ahead and clear this out a little bit. If we break out and do this same formation, sorry guys, and we are not editing this out. Okay, so if we break out and we do the same formation, right, where we're just going higher, just like how this is going higher, so we break out and we just keep going higher and higher and higher and higher, guys, this will look pretty bad for the market. So that's what I'm watching for. I'm trying to see if we continue finding strength on yields. So I think these two indicators, both the dollar and yields, kind of show some type of promise for the downside on the market. So I'm just pretty worried right now. I guess. While everyone's kind of euphoric right now, I'm still on the edge. I'm still kind of worried that the market is still going to go down. That's why I'm still sitting on a lot of cash because, I don't want to load a lot of cash on the downside in a bull market. And I also don't want to buy equities, stocks, just for investment sake because everything's pretty expensive and you are looking pretty bad on the dollar and yield. So it's like kind of hard to make trades at this point. That's why I stress the dollar and yield so much because this kind of gives you the precursor of what's to come. So please pay attention and don't get caught lacking, okay? Next, we have our indexes. I'm sorry, let me fix this. Now we have our indexes. And let's look at the Nasdaq and the SPY, the ES, right? So as we look at these two charts, we can tell that we're still in this bear flag, right? We're still in this bear flag even on the weekly. Even though we're going higher and higher, we're still kind of in this bear flag. We just have to try until we break out of this bear flag. We still have to try to get to the support area, right? To continue this bear flag or whatever until we break. But we still haven't broken out of these key areas yet. The only key area where I could say dang, we actually broke out was this Nvidia demand zone, which was first a demand zone, then it turned into a supply zone, right? Once we broke it, it started turning into a supply zone. We found weakness and we ended up breaking over it, which was amazing. Us breaking out of this Nvidia demand zone is very impressive. I'm not gonna lie, but there's still a major demand supply zone between your February high and your February close, which was also your March open, as we can see right here. This is still a supply zone. And we can see that this was our last week high. So if we can get above this, then we can say that we can possibly break out of this bear flag, right? We could break out of it and try to retest this March close, April open. If we could retest this zone here, then I think I'd want to try, right? I would want to try to see if we could break all-time highs. But even if we come and we retest the zone, my entry wouldn't be on a retest of the zone. It would be on a break. We have to break above and then come back down and retest, right? And it will try to be like a retest of this, right? It looks like this. It would be us breaking out, right? Let me do it on a daily chart. Look better. So it'll be like us breaking out. So if we could break out of this February high, right, and we come and we retest this, right, and then we break out and then we come back down into our February high, February close area, and use this area where we were struggling as now demand, right? So if we come down and we use this as demand, then this will instigate not only a break back out of this April open, but it'll also instigate maybe some possible more upside, maybe into this supply zone, right? Maybe to the upper end of the supply zone, into this all-time highs. So that's what I'm looking for. I'm looking for some type of break and retest if we end up actually breaking out. Now, again, with everything lining up towards us topping out here, I do believe that if we cannot break above this 18.4, which is our February high, I do believe that we are coming right back down. I believe that we are going to come right back down to where we started, right? I do believe that we're going to come right back down here into this meta supply zone, which will now be demand because we broke above it. And if we come down here to the 17.8, right, we could, right? Keyword could try to break back out, right? But if we can't break back out and this Nvidia demand zone now acts as supply, then it's either we either break out or we come right back down, right? We come right back down. There's still this buy demand zone here. There's still this one here as well. But our ultimate target would possibly be, and I say possibly, would be somewhere down here in this buy zone, right? So these are the areas that I'm watching for. I'm not saying this is going to happen, but this is what I'm watching for. You got to be kind of prepared for everything to happen within the market, right? You can't just be prepared for one type of scenario. You have to be fluid, be like liquid, be like water, be fluid and take form of whatever shape this market comes at you, right? Whatever shape the market comes, you have to fit that shape. If the market comes in a cup form, you got to be in a cup form. If the market comes in a teacup form, you got to be in a teacup. If it comes in a bowl, you got to be a bowl. If it comes in a Capri Sun bag, you got to be a Capri Sun bag. That's just what it is, guys. So that's what we are looking for this market for the NASDAQ. Same thing with ES is pretty similar, right? So we are within the zone here. This zone was where you rejected from in March, beginning of March. It's beginning mid-March area. This is where you were rejected from before. So this can act like some type of supply if we come and try to retest and we fail again. If we fail again, this can act as some type of supply zone to retest this NVIDIA demand zone, and then we can try to go higher again, right? Back into our all-time high zone, this April close around our April high, like around this area. Or if that doesn't work out, again, same thing like NASDAQ, we can try to come up here. We fail, right? If we end up failing, we do have this meta supply zone here that can act as demand. Again, if we fail that, there is still this major demand area, and again, we have our major demand buy zone down here. So it just all really just depends on how the market moves and how, again, we have a lot of data coming out. We have a Fed speaker. It's a lot to go on. But right now, I must say, ES is looking very bullish. ES is looking more bullish than NASDAQ. The NASDAQ is still operating in a downtrend, while the ES has broken out of the downtrend. And I've told you guys countless of times, when ES is bullish and NASDAQ is bearish, that just means that the NASDAQ is lagging behind ES. But if ES is bearish and NASDAQ is bullish, NASDAQ again, I believe, will turn bearish. So right now, the side is kind of leaning towards the bullish side. It's looking pretty bullish. However, the game is still, bears are still not down and out. So I do still want to stress that bears are still not down and out. We have, like, look at this bear demand, right? Even if you look at the volume, like, let's look at the volume. As we've been going up, our volume just been dropping as we're going higher, right? When we're going down, our volume was increasing. Same thing, volume increasing while we're going down. As we're going up, volume drops. Guys, it's been like that since March. Our volume is dropping as we go higher, right? Even if you look more on a daily, like look at the NASDAQ. On a daily, the NASDAQ is like a clear picture, right? Let me clear my indicator so you can see it better. Boom, 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 boom. Okay, even like I said, right? The NASDAQ, as we're going higher, as we're going lower, increase in volume, right? Volume increase, volume increase. Volume is increasing as we are going lower. Volume is increasing as we are going lower. As we start going higher, volume drops, volume drops, volume drops as we go higher. And like I said, we are starting to top, right? I believe that we're starting to top, and you can see we're starting to get that uptick in volume that people are starting to step in. People are starting right now. Volume hasn't kicked in, but they are starting, right? Obviously, we're going to get a lot of volume this week because of CPI and all that extra stuff. So I do believe that we are potentially topping, and it's the same thing with the ES, the SPY. As we're going down, volume is increasing heavily, and as we go up, volume is decreasing, right? So I do believe that we are going to go down, maybe at least to retest this NVIDIA demand zone. But again, if we fail, we do have a lot of room to the downside. So that is what I'm looking for ES and NQ. Next, we have our RTY and our Dow Jones, right? So RTY, I told you guys that we were going to try to attempt to break this 2090. We did break 2090, and we got to 2096. It lines up with our February confluence here, and you look decent. Like, you look decent. However, you are forming some type of head and shoulders. And let me go ahead and put it on a line chart so you can see better. So you have your head, right? Your head right here. and your two shoulders. So you are forming some type of head and shoulders. So I would not be surprised if you actually break down around here. So if we get some type of retest to our 2077 area, so that is our March open. If we get to our March open and we find weakness here at this March open, I'd want to look for names like maybe Coinbase, maybe MSTR, Target. I don't know, maybe some just mid cap names and stuff like that. Some mid cap, small cap names, and I would short it. That's what I would do. I'm not saying that's what you should do, but that's what I would do. Okay. But yeah, I think this is a clear cut. What do you call it? Head and shoulder pattern. And not only that, you are forming some type of rising wedge here. This is a rising wedge where again you bounce around, and then it gets kind of like tighter and tighter until you break. Okay, so that is a rising wedge. So that is what I am looking for at the moment. Now I will say the Dow Jones looks so sexy. It looks really good. I'm not gonna lie. This looks actually very bullish. It looks like the most bullish chart out of everything. But however, bears are still not down and out here. Bears are still not down and out here, right? So the only difference, right, with everything is that you are getting some type of rising volume. Like you got this drop off, right? When volume rose and you're going down, volume start rising, right? And obviously as you start going up, we have lower volume as we start going higher, right? But same thing, like kind of like you could see on the NASDAQ a little bit, you are getting some type of spike, some type of rising in volume right now, right? Now, it could be more upside to come, like that's why the volume's starting to rise. Or if you see how we ended the day on Friday, we ended in some type of shooting star. This is a small one, but we end up in some type of shooting star, which is a reversal signal. If we start seeing some downside and the volume just really spikes on the downside, then okay, I will have to switch my tone a lot. But right now, you look pretty decent on the Dow Jones. Like, you look pretty good. Like, this looks really good, right? If you break above your February high, which is 39,763, if you break above that, then I think you could try to retest the zone here between April open and your April high, which is 4157 and 4358. So that would be what I'd be watching for. But if you fail this February high, then obviously this is super obvious, easy, short. If we fail this, then obviously we have this operating uptrend on a daily, and this will be what I'd be watching for between your March low and your, what is this, February close, February open, like around January close, February open, which is 38,700. This is where I would look for buyers to try to step in, because this is where you actually broke out before, right? So we broke down here and then now we broke out. So this will be our area of confluence. This will be our area of support here. So if we use this as support, then obviously we can make our way higher. But if we break this support, then yeah, we're going down to the gutters. And we already kind of used this 2021 all-time high zone as a bounce area. Maybe we might do it again. If not, like I said, we could keep going down. And there are like a lot of support areas down here, so we're gonna see how it goes. Like, I do believe at this point anything goes, and I can see why a lot of people are bullish right now, and I can see it. Like, I definitely can see it, but we got to see how everything plays out. Next, we have our tech charts, and we are kind of making time. We are around 25 minutes. This video, I kind of anticipated it to be a little bit longer, to around 30 to 45 minutes, so we are kind of on time. And yeah. Anyways, so we have our big tech chart, which is right here. Big tech looks pretty decent. Yeah. So we end up rejecting around 3150. If we end up breaking above 3150 and we make our way back to this supply area and we break it, then we are bullish, super bullish. However, if we cannot get above, not even 3150, but if we cannot get above 3130, between 3130 and 3113, this area here, then I'd want to say that we try to come back down and try to make some type of supply area between 3050. If not, we might come down to who knows, maybe 29.75 or even come all the way back down to 28.40. So it really just depends. Like, it really just depends at this point. Can't really say what's to come because we are kind of in the middle of a range, but we are on the upper end of this range, so it's not. Can't really. We just gonna have to see. Let's put a fib on it. Let's see how what the fib is telling us. If we put a fib here, let's say we put a fib between our, what is this? This is our March high and our April low, right? So if we put a fib here, then let's see. Put a fib here, then yeah, we'd want to try to break. If we break above our 32, our all-time high 32.22, then we can target this 33.49. If not, then I'd want to look for support. Like I said, like around this 3,000 area. If we get to that 3,000 area, that'll be pretty good. Maybe some buyers can step in there, but it just all depends at this point. Next, let's look at your XOK. Your XOK looks pretty decent. Like I said last week, your 206 is your line in the sand. If you actually break above your 206, then you look pretty bullish. You're bullish above 206. However, you are apparently trying to make lower highs on the weekly chart if we cannot get above, right? So if we end up failing and we can't get above, then we can try to retest for a lower low of 192, getting under that to like maybe this 187 area. So that's what I'd be watching for XOK. However, if we do break above, then guys, we are going to the moon. Like, XOK looks really good if you actually break out. If you actually break out, then we can be targeting anywhere up here. Anywhere up here is where I'd be targeting. So your max will be about 250, around there. So that's like almost $50 of upside on this market. Next, we also have our QQQ. QQQ broke above our 4039 area, which was our major area of where I believe bears sat, and we did find bears here, right? We actually end up finding bears here. However, we end up breaking above, and again, that does not mean that we're going to go to the moon. We have to break above this 446 area, 445 area. If we break above, then I will side with the bulls. I'm not gonna lie. But at this point, I'm still looking for that lower high on the weekly. Still looking for it. And still looking for it because our last high was here, right? It was this 446. So if we break above this 446, then okay. But if we come close and we fail, then guys, we could still try to make a lower low, a lower high and a lower low. We still can try. So I'm still in my puts for QQQ, and until we break above, then I'm not really tripping. Like, my loss right now is around 30%, and coming up here, like, probably going to be like 35 to 40. I can take that. I can take that L because I didn't leverage a lot. You know what I'm saying? And honestly, if I do find weakness here, then I will be adding more position. I will be adding more position because this could be a nice play down here. Well, up here. So if we end up failing, then this will be a nice breakdown if we actually end up doing breakdown. If we actually do breakdown, but if we don't, we could find some type of buyers to step in around 435 to hold you up to come back up. Or if you fail the 435 hold, then maybe we come right back down into our lower low. So that's what I'm looking for the Qs. Now, if we go to our chips, this gets pretty interesting, right? Chips, our area was 220, right, on SMH and SOXX. That was where I was looking for some type of sell to come in. Mainly because this is where we've been holding our downtrend. Now, SOXX is holding that downtrend still, while SMH has already broken above and it's mounted, right? So at this stage, if we get back above this like 230, if we get above 230, then I'm not gonna lie, I do think we can try to retest this 240 area. However, if we end up failing and we get back below our 220, then that would be very bearish for SMH. And again, SOXX, if we cannot break above 220 and hold, then I do believe we're going to keep going lower. And you have room lower, like even on SOXX and SMH. Like, look how much room you have lower. Like, you have room, you know? So I'm just waiting. Like, I'm just waiting to see what happens this week. Just put your alert. Like, between 2020 and 2030 is what you're looking at for both of these charts. XSD. XSD is pretty interesting as well. You are sitting at 229. So if you break above 229 to get a 230 and you hold, then guys, you have room, right? You have room to 251. Like, that is your room, right? Especially if you break above this 242. However, if we fail yet again, like, this area is where you want to see. If we keep failing this and we actually like break down, then you'll see like the whole market of chips just shift, right? So this is kind of like my indicator to see like where chips are. If we get above this area, then that means we are euphoric. If we're on this area, that means we're kind of bullish. But if we're down, then we are bearish. So I want to see how we end up. Are we breaking out or are we breaking down? And that is the story of this video. Are we breaking out or are we breaking down? Okay? So that's just really the story across the board. So even if we look on Qs, we look on a dollar, we look on everything, are we breaking up or are we breaking down? That is the story. Now, I want to go through some sectors, right? Because usually this is like the end of the video, but I want to add some more content for you guys, right? So let's go through XLF. I think XLF is what I've been looking at the most within the SPY sectors because they kind of paint a very interesting story. So XLF, right? XLF has been in this uptrend and it's been like the most risk on asset that you can look at to see like if the market is bullish or bearish, right? If we're risk on or risk off. And we've been in this clear uptrend for almost a year now, since October. And this looks really good. Like, this was really good. But one thing to notice is that once we broke down out of this uptrend, it's been getting weird, right? So we broke down and we came into this like zone area, right? We came into the zone where it kind of aligns with our October lows, right? So this can act as a major support, which it has been. It's been a major support, right? So this major support can lead us right back to the upside, or it could act as some type of, I guess, flip to the downside, right? Some type of indicator that we might be going down. And one thing there is to note, we did create this W. So right now you do look pretty good risk on, right? So if we break out into all-time, like out of our all-time highs, then I'm not going to lie, you look pretty good. You look pretty damn good to keep going higher. However, if you fail to get above your all-time highs here, like if you just fail, then I'd watch to see if we break out of this channel. If we break out of this channel, then I do believe that this will be like the beginning of an end, right? This will be a beginning of the end until we find another major support, and then we might try to retest. But I do think that we are due for a larger pullback, a larger scale pullback. I mean, at this stage, it could happen. Maybe not. Maybe it can. Who knows? But I don't want to watch XLF. Like, I would really, especially how with rate cuts and everything that's going on with these banks and the debts that's going on and the credit lending, and I don't want to watch the banks because the banks are performing pretty well, and if the banks start to turn, that's when the market should start to turn as well. But that's really it. That's all I got to go over. I don't have really any updates on whatever I'm watching for the week. I'm just watching the market, really. And I will probably drop something this week in terms of like maybe an update or maybe like some stocks that I'm watching, maybe just like a core list video of like the core list of, you know, big tech companies, and maybe we could see which ones look good for maybe a potential swing trade down. Who knows? I don't know. We will see. Depends how the market, what the market does and what the market gives us. So anyways, if you guys enjoyed the video, make sure to like, comment, subscribe if you're new. Make sure to join the Discord. That is down below in the description. And join just the community, man. Just join what we got going on. And yeah, with that being said, I am Goated Trades and I am out. Stay green for the week and stay positive. All right, guys, I am gone.